Wow, these are the days that we live for here in Southwest Florida. Today is November the 8th. It is about 72 degrees, low humidity and a slight wind. Makes it very pleasant and comfortable here. Today's video, I want to talk about mortgages and interest rates and how they're affecting the housing market here in Southwest Florida. And our featured speaker today will be Gris Bettle from MSC Mortgage. He's our in-house mortgage guy. So let's go sit down and take a look at what Gris has to say.
Don't buy real estate if you experience allergic reactions to happiness, satisfaction, pride, fulfillment, contentment. Stop buying real estate if you don't like community, a sea of belonging, a diversified portfolio. Buying real estate may cause you to shop at hardware stores, furniture stores, and design centers. See your realtor immediately if you experience any of these symptoms.
So today we're being joined by Gris Bettle from MSC Mortgage, and he is our loan officer here inside the building at Michael Saunders and Company here in Lakewood Ranch. And I don't know if you know it or not, but we have a title company, we have a mortgage company, and we have an insurance company, all in-house, so that if you decide to make a purchase through us, we can probably handle it all within the umbrella of Michael Saunders and Company. So Gris, appreciate you joining us today.
All right, thanks for having me. I'm really happy to be here, and I've looked at a lot of your videos. They're very high quality and very informative, so I'm really happy to be a part of it.
All right.
But yes, we're talking about rates, and rates are still low. They're holding low. A lot of people who prognosticate think that rates will go up with inflation, but the Fed is putting all their cards, and I don't know all their cards because they're always very flexible, but they are saying that they think inflation will stabilize once the supply chain bottlenecks ease. So although you and I are feeling inflation, and typically inflation leads to higher rates instantly, but we're seeing inflation. First quarter was about 7.5, last quarter was about 3, but every day we're feeling inflation. So you would think if it was a normal economy, rates would go up, but they're holding steady. And the Fed is tapering, which means they're buying less mortgage bonds and less treasuries, but they're still buying them. And the market has digested all that data, and they're still low. A great, well-qualified buyer, 30-year fixed right now is 3.125. And, on a $400,000 loan, which is an average loan in our market, an eighth of a point only leads to a $25 a month difference. So even if rates go to 3.5 by this time next year, homes are still very affordable. If you think inflation will still be there after the supply chain bottlenecks are done, then rates will go up. If prices do hold steady, then rates should stay low, because the Fed is focused not only on inflation, which they used to be only on inflation because it was such a huge problem in the late 70s and early 80s. And Mark has a chart that he shared that was really, really awesome, where it shows the last decade. The 2010s rates were averaging 4.09%. In the early 2000s, 6.27, and 90s, 8.125, the 80s, 12.7. So the Fed is trying to avoid the 80s and 90s. And I remember I started my career in 1998. I gave customers 7.5%, and we were happy. But so rates are very good. They're probably going to stick around at least for a year, and that'll keep prices up. And especially in our Florida market, it's one thing to talk about the overall market, but our Florida market specifically has a lot of unique characters where people are moving here left and right from high cost states. We normally get people here because of the weather. And now we're getting people here for tax reasons, where it's a lot cheaper to live here tax-wise than it is in other states. So I've never done.
Let me ask you this: what about jumbo? Where are we at on jumbo, and what about VA, and then what about ARMs?
Oh, great point. Great point. Each of those classifications of loans has their own ecosystem or their own uniqueness about the loans. VA loans are my absolute favorite to do, because obviously you're helping a veteran who's earned that privilege, and those rates are about 3/8 lower than what you and I could get, Mark. So veteran VA loans are really incredible, because you can put zero down if you want, but a lot of veterans here have money to put down and they don't put zero down, if you put 5% down or even 10%, the funding fee is lower. So that's the secret cost of VA loans, is the Veterans Administration uses the funding fee to fund the guarantee, because it's a guarantee to banks for the first 25% of that loan. That's why they can do such high loan to values. But you asked about rates. So right now, a very good conventional rate that you and I could get, Mark, is 3.125, but a veteran is going to get 2.75, and it's on a 30-year fixed, and that's with no fees and no points. So that is wonderful. And jumbos, right now, that's anything over 548, 250, but they've just increased the conforming limit to 625, and they may revise that by the end of the year even higher. Some people are calling for 650. So 650,000 would be the Fannie Mae limit. So again, that's that 3.125 I was talking about. But if you go a loan amount over 625 or 650, perhaps, then you're a whole new world. It's good and bad. The rates are better than conventional for highly qualified borrowers, but because they're not Fannie Mae or Freddie Mac owned loans, it's old school traditional underwriting guidelines. So that means 2 years tax returns. We look at where the money goes, where the money comes from. And so it can be a little more work, but most of those customers in that range are pretty comfortable dealing with financial transactions and financial documentation needed. One scenario that is very common in our market is someone who could pay cash and would need to pay cash to get a property under contract, but ends up getting financing. If you give us 30 to 35 days to close, and the seller, they net the same amount of money. When you make a cash offer, you just lose your financing clause. So you're going to close regardless. If, God forbid, I haven't done it yet, but if, God forbid, lending dropped the ball, you would have to close with cash or lose your earnest money. That's the risk you take. But these customers are very well versed on their risks and are very good with their finances and getting documentation to have a smooth transaction. And so, for instance, you can do a 5-1 arm at 2% with a point, or 5-1 arm at 2.375 with no lender fees at all. And this isn't scientific, but that's basically free money. And just to give you an idea, a conforming loan at 3.125 on 500,000, that payment's only $21.76 a month.
Well, I'm going to put Gris's contact information in the description below, so that if you're considering coming to the Lakewood Ranch area, any part of Sarasota or Manatee counties, Gris would be able to set you up with getting the loan process started. And Gris, anything else that we need to know before we conclude this short video?
Oh yeah, well, this may be a topic for another video, but buying a new home versus resale does have different costs and different risks in terms of interest rate, because you can't lock your rate till you're within 6 months of completion. And builders are having some supply chain issues and taking a while to close. So that maybe I'm jumping the gun, but I'd written that in my notes and just thought I'd throw it out there too. It's not just a new home with all the bells and whistles versus a non-new home that may need some cosmetic renovation, but that's right. Maybe another topic for another day.
Very good. Very good. So I want to thank Gris Bettle for taking time out of his day to go over the mortgages, interest rates, and where they're at for the different folks, whether you're VA or conventional or doing a jumbo. And if you get value out of this video, just click that little subscribe button, ding the little bell, so every time I put on a new video, you'll be notified. Don't hesitate to call me. I get calls every day from people just like you watching my YouTube channel on living in Lakewood Ranch. Mark Boehmig, Michael Saunders and Company.